Now, China's economy showed further signs of weakness in the second quarter. The nation's GDP expanded by 0.8% during April to June compared with the previous quarter, and worryingly, youth unemployment has hit a record high. Data shows missed growth expectations and consumers remain cautious, adding pressure on leaders to unveil further stimulus. Here's a look at the main storm clouds over China's economy. First, sluggish consumption. For almost 3 years, strict zero-COVID policies meant repeated lockdowns, the fear of being arbitrarily quarantined, and other draconian health measures. When the restrictions were lifted at the end of 2022, millions flocked to restaurants, shopping malls, and on long-awaited holidays. However, that optimism did not last, with the recovery running out of steam and the labour market under pressure. More than 1 in 5 young people is unemployed. As per China's National Bureau of Statistics, unemployment among Chinese youngsters jumped to record 21.3% in June. Overall, urban unemployment remained at 5.2%. Next, that's the real estate crisis here. Bricks and mortar are pillars of the Chinese economy. Property has long been seen as a safe bet for middle-class Chinese seeking to grow their wealth. The demand sent property prices soaring while developers expanded at breakneck speed thanks to generous bank loans. But as the real estate companies' debts reached unsustainable heights, authorities pushed the brakes in 2020. Since then, developers' access to credit has been considerably reduced. The most valuable entities are struggling to complete their projects, fueling a crisis of confidence with potential buyers that is depressing prices here. China's central bank last week decided to expand its support for developers, notably through loan repayment extensions until the end of 2024. This decision comes after officials cut interest rates last month. Analysts say the measures are insufficient to save the sector. Fears are growing over a looming deflation as well. For months, prices in China have been virtually flat. While on paper, this may seem like a good thing for purchasing power, drop into deflation would pose as a long-term threat. Instead of spending, consumers postpone purchases in the hope of lower prices. And in the absence of demand, companies cut back on production, freeze hiring, or lay off staff and agree to further price cuts to clear their inventories. It's consequentially weighed on profitability as the company's cost remains the same. Chinese trade is under threat as well. China, long described as the workshop of the world, remains highly dependent on exports, making it vulnerable to changes in the global economy. The threat of recession in the United States and Europe, combined with galloping inflation, is weakening international demand for Chinese products. In June, exports fell for the second month in a row. Xi Jinping is seemingly struggling to navigate through geopolitical tensions. Tensions between China and the United States have also hurt the economic outlook. Washington officials are working to de-risk their economy from China. Now, United States is working to tighten restrictions on semiconductor exports and is pressuring allies to do the same. Last week, the Chinese customs spokesperson blamed outside forces having a direct impact on Chinese trade. And last but not the least, indebted local authorities. Also dragging on the economy is dire finances of some local authorities after 3 years of astronomical spending to combat COVID. The real estate crisis has deprived them of a major source of property income. China also faces formidable challenges related to climate change. As per the Rhodium Group, an independent research provider, China's reliance on heavy carbon-intensive industries makes its green transition burden heavier than compared to other nations. And Japan's Prime Minister Fumio Kishida is on a 3-day West Asia tour. On Sunday, Kishida met Saudi Crown Prince Mohammed bin Salman. The two leaders discussed measures to boost energy in Jeddah and business ties between the two nations. Saudi Arabia continues to be Japan's biggest oil exporter. According to reports, Kishida and Saudi Crown Prince are set to agree on rare earth resources cooperation and will jointly explore development projects in other countries as well. Kishida also met Saudi Energy Minister Prince Abdulaziz bin Salman, who affirmed continued oil supply for Okinawa's government. Oil reserves in southern Japan, adding that Saudi is Japan's most reliable partner and fulfills Tokyo's oil requirement by up to 40%. Saudi Arabia said that it remains committed to securing oil supplies for Japan and will continue cooperating with Tokyo on clean hydrogen, ammonia and recycled carbon fuels. On the other hand, Kishida has assured of Japan's continued support to Saudi with modern technology to obtain clean energy. And it's also keen to make Riyadh a mining destination. This is Kishida's first state visit to the Middle East since 2020. After Saudi, the Japanese Prime Minister will be heading to the UAE, followed by Qatar. WION is now available in your country. Download the app now. Get all the news on the move.